welcome to the midweek edition of Business Morning here on Channels Television. Good morning. Welcome to this 29th day of March in 2023. I'm Ini John Mekwa. Let's head right into business. Crude prices rose for a third day in early Asian trade on Wednesday as a halt to some exports from Iraq, Kurdistan raised concerns of tightening supply and market sentiment improved as fears of a banking crisis eased. Brent crude futures rose 42 cents to $79.07 a barrel, while the U.S. West Texas Intermediate crude futures climbed 59 cents to $73.79 a barrel. There are worries over reduced supply from Iraq's Kurdistan region and relief in financial markets worried about the banking sector turmoil continue to boost investors' risk appetite. Expectations that the United States Federal Reserve will keep a cautious stance in raising interest rates because of banking stress also increase hopes for stronger global economy and oil demand. Oil prices have been rallying after Iraq was forced to halt exports of about 450,000 barrels every day from its northern Kurdistan region through Turkey, after an arbitration decision confirmed Baghdad's consent was needed to ship the oil. Barclays said on Tuesday that any protracted outage of Kurdish exports through the end of the year would imply a $3 a barrel upside to the bank's $92 a barrel Brent crude forecast for 2023. Still in the global space now, U.S. wheat and soybean futures closed higher on Tuesday and corn closed nearly flat as traders had doubts about planting delays and adverse weather with an eye toward a key U.S. crop seeding report, which is due at the end of this week. Traders squared positions as they looked ahead to Friday's annual U.S. Agriculture Department planting intentions report. Analysts expect 2023 corn plantings at 90.880 million acres, wheat at 48.85 million acres, and soybeans at 88.242 million acres. Spring wheat gained on speculation over planting delays in the northern United States plains, and that's because of cold weather. Soybeans were also supported by technical trading and a bleak outlook on harvesting in drought-stricken Argentina. The most active wheat contracts on the Chicago Board of Trade settled for 1 3/3 cent at $6.99 for 3/3 of a bushel. Soybeans closed at $14.67 for 3/3 of a bushel, and that's up about 1.8%. The most active contract's strongest percentage gain in 4.5 months. Corn settled down 1 cent at $6.47 for a quarter of a bushel. And that's it from the global space. We head home now, where today is supposed to be that first day of strike that was threatened by the Nigeria Labour Congress. Well, the strike may have been averted after a meeting and subsequent briefing of journalists by the Minister of Labour, Dr. Chris Ngige, and also the President of the Nigeria Labour Congress, Mr. Joe Ajero. This is what they said after those meetings.
For a planned picketing of the branches of the Central Bank of Nigeria across the Federation by the Nigeria Labour Congress to give updates on the recent happenings at the 68th Ministerial Weekly Briefing. The leadership of the NLC had earlier given the federal government a 7-day ultimatum to end the cash scarcity or face a nationwide protest by Wednesday, March 29.
We told the CBN what to do, and they did exactly what we asked them to do. Engage them, and they did. The NLC affirmed that there is an improvement in the cash flow. They praised the CBN at our last meeting yesterday and told them to improve. I'm optimistic they will not strike because we have apprehended, like I told you.
The minister responds to questions about the ministry's slow response to crisis situations.
We have conciliated about 4,000 labor disputes. More than, I think, 4,300 something since I came to that ministry. And you don't hear about them. We have what we call rapid response, especially in oil and gas. Rapid response, because we know the implication.
He also speaks on palliatives after fuel subsidy is halted by June.
It is left for the incoming government to take it or leave it. and address the issue as as best as they deem fit. But definitely, like I told you, we're already handling some of the envisaged challenges. We are handling the issue of pay rise. I say all MDAs are doing that, even for federal civil servants.
The minister affirms that 19 job centers offering various services have been established across the 6 geopolitical zones as part of the government's efforts to strengthen production self-sufficiency and skill development. But perhaps the real concern lies in private sector involvement, how to upscale unemployment rate since it quadrupled in 2015 and 2020 recession. From the presidential villa, Gloria Umezuke, Channels Television News.
With reports coming from all the states of the Federation and local governments on the level of compliance of banks. And we are happy to tell you that, yes, there is compliance by CBN. But the NLC, after its next meeting, doubted the sustainability of that compliance. And we don't want to be calling you back after 2 days for another action. And we felt that we have to monitor this compliance for the next 2 weeks to see whether it is sustainable. Because they have rushed to move money to commercial banks. And some of those commercial banks are getting empty again. Queues are returning in some of them. So it will be very naive for the Congress to hurriedly call off the action. Whereas we are not shutting down tomorrow. We want to loosen up for another 2 weeks, with committees set up at the national level and in all the states of the Federation to coordinate the level of compliance.
So that's it. That strike that was supposed to start today has been averted, at least from the eyes of the NLC. They're watching to see how things will go in the next 2 weeks, and we do hope we do not have to shut down the nation, because of course when we shut down the nation, it affects everyone, affects economic activities, and affects, I mean, even the rural, the executive, and everyone. So we do hope that that doesn't happen, that the CBN will indeed keep to its promise and word. But another aspect of that is the issue of e-transactions. We did see, of course, the volume hiked in the midst of all of this. In fact, the volume of e-transactions increased significantly in February, rising by 121% year on year. That's compared to February 2022. By 2023, e-transactions were up 121%. We're not surprised because the cash wasn't there, so a lot of people turned to the electronic medium. And we saw also, I think about 40% of failure of those transactions. I'm almost sure everyone watching this program had an experience or has had an experience when it comes to that. So, and yet we are still preaching the gospel of a cashless economy. That means that this electronic medium must work if we're going to have to be a cashless economy, which is the way of the world, which is the way of the future. And let's not forget that by 31st of December, the old notes will become illegal again, at least from the pronouncement, except there's an extension again. Those old notes will become illegal. What's going to happen then? Are we going to go back to the Supreme Court? Are we going to go back to the e-channels? Will they work better? What should banks and financial institutions be doing at this time to prepare themselves for that demand that most likely will come at the end of the year? We have Mr. Iyele Okeremi, the Chief Executive Officer of Precise Financial Systems Limited, joining us to share his thoughts on that. Good morning, Mr. Okeremi. Thank you so much for your time this morning. I think you're muted, Mr. Keremi. I cannot hear you, but I believe you work on that. Now, okay, so we did see the failure of a lot of e-transactions when the demand was really high. Some people have said this is because it was unexpected. The financial institutions were not prepared to handle such load, or maybe they underestimated the demand. What's your perspective? Why did we have such a high level of failure?
I mean, of course, pretty much there are several possible reasons. And I'll give my perspectives on that. So first of all, when we design systems, systems are designed for certain load, so to speak, certain expected volume, as it were. That's on one hand about the system design. Secondly, the pipe, the infrastructure that conveys data from the users or the customers up to the bank's servers. Those are also things that also have capacity. So essentially, when people are designing systems, and this is absolutely normal, we try to project what load we expect to carry. And sometimes we leave some room, maybe 20-25% room for possibilities. But when things happen and then you suddenly find yourself having to carry load that's a lot beyond what you have scaled for, then you can have failures. So these are possibilities, both from the bank's end and also from even the infrastructure that carries the data. So these are the two possibilities that could have led to lots of failures, because if you looked at the time frame within which we were talking about trying to get so much to happen, I think the time frame may be a bit short for everybody to complete too long.
So some people have said that Nigeria has been preaching the gospel of cashless economy for a couple of years now. Shouldn't the financial institutions, shouldn't they have been prepared? Wouldn't it have been better if they had excess capacity? And so now when the extra just came on, they would have been able to handle it.
And that's a smart reasoning. But I'll also tell you that, yes, Nigeria started talking about cashless. And if you look at it, it started very smartly. We started using a pilot scheme. We started from Lagos, cashless Lagos. And if you took a look at what happened during cashless Lagos, it was fairly successful. And we could have continued scaling that way. But, of course, many factors are involved whenever you want to do this kind of things. Remember, technology is just one factor. So when you have this kind of innovation or novation, so to speak, it sits on the tripod. You have the technical novation or innovation, as you may want to call it. You have the legislation or the laws or the rules that govern how things happen. And then thirdly, you also have the social impact. How do people respond and how much do people understand? So if you take a look at these three things, you realize that there are quite a lot of people also who have never used electronic banking prior to this forced usage that happened recently. And some of them also made mistakes. And some of the mistakes that even happened from the user side would have led to failures. But having said those, the honest truth is that while it sounds beautiful and nice to say, oh, we want to capacitize for the rainy day, it could be a lot expensive sometimes to just create capacity that's not being used, that's latent. And remember, in the world we live in today, technology advancement is so fast that sometimes if you just overcapacitize, it would just not necessarily cut it for you from a standpoint of return on investment. So what people do is, reasonable projections, looking at their businesses, how much growth are they expecting? Every bank or every company, every organization then capacitizes appropriately to that kind of scale. But of course, this that happened was a major jack, so to speak, in volume. quite a number of the players were definitely not ready for this. And it turns out that getting ready for this kind of thing sometimes may not be a game of plug and play. Sometimes it may actually take major redesigns. And I speak from experience. Sometimes it may take major redesigns. And some of these things actually take time.
But how much of an impact the Japa syndrome play in this? Perhaps if we didn't have that huge, major exodus at a period of time, do you think the country would have escaped those failures in transactions?
Again, when we look at the conceptual model of these things, there are quite a number of factors, like you said, and you've got another factor, which we all call the Japa syndrome, which basically suggests that quite a reasonable number of skilled hands that understand the genesis and the design of some of these solutions are not in the system again. Definitely, that plays a very huge role in this thing. And I remember I told you that. So you have two issues. First is maintenance of what you even have. How do you even maintain it? And then second is your ability to expand. You see, the honest truth is that from an engineering standpoint, it's nearly impossible for you to expand something that you do not understand. So if you are going to expand something that's on ground, you need to have reasonable understanding of what is there. And then even to maintain what is there, you still need people that have reasonable depth and understanding of the solutions. And just like you said, Nigeria happened to quite a number of people, smart people, particularly in tech and in the healthcare sector. Now it's happening in education. So I don't even know how many. It's not just, it's beyond double, it's beyond triple, maybe 4 triple 1 against the system. So you have the guys who could have used their hands and their heads, to try to uphold the system. A good number of them are not available in the system anymore. And then you are expecting a lot of influx, and yet you expect innovation. It's a lot of jeopardy in this society. Definitely, the lack of skilled hands was one of the major factors to this thing.
So looking forward now, when it comes to skills, isn't it possible to, some of those skills that have left the country, can they not be employed remotely to handle some of this? Because when we look at how long it takes to train a skill to fill up, the former space, I think that's a longer route.
Now, listen, you see, when you look at certain things in business, if you take a look at the operational models of certain types of businesses, for example, if you run, some types of consultancies or probably training, it is probably easy to resource to order. What that means is, you don't really need to even, there are many people, many organizations, people that do sometimes even construction and stuff like that. They really don't have so many employees. But when they get projects, because the capacity, the kind of skill that they require is probably readily available, it's easy for them to resource to order. But if you talk about high tech, and you talk about particularly intellectual property business, resource to order doesn't cut it. Because remember I told you something. Even when you have the smartest programmers, when you have the smartest systems engineers, you also need to understand that you need the best of business analysts who can explain to them what the business processes are, what the reasonings are, and not just the what, not just the how, but also the why. So these are things that, although some of them are documented, it will take time. So essentially, if you really wanted to do this kind of a thing, you need organizations that have a fairly stable compendium of skill staff. It's not easy for you to try to do the kind of things you are talking about and think that you can assemble an army just by making a few phone calls. And so if you take a look at organizations that are doing serious tech business, I was in a meeting with a friend of mine yesterday, and this was one of the things we were discussing. And we were discussing about some companies, and you hear software companies in other parts of the world that have 200,000 software engineers. And you're asking yourself, what are we actually doing here? They recruit 20,000 engineers every year because they're already building resumes Now, but if you take a look at the reasons why some of these companies outside of Nigeria are able to achieve what they are achieving, of course, there are so many factors that are above my own pay grade. You have to look at even national risk factors, country risk factors. How many people want to live in certain countries? And how many people can you continue to trade in those countries? So essentially, if we want to take a look and unpack what you have said, it would require a lot more beyond just the banks. What would be required would be clear national strategies for ensuring that certain skills, and I'm not talking about tech alone, I mentioned tech. Tech is very essential, but so many fields that we think are important to our national development, we must necessarily have a national strategy that guarantees that we have a steady supply stream of skilled workers that can power and oil these things. Now, I'm going to say this once, and I hope it's fine now, that if we do anything short of that, we haven't started as a country.
All right, Mr. Yellow Kirami, we need a clear national strategy to deal with the issue of going on in the financial sector, e-transactions to be precise at this time. Thank you so much for your time and sharing your thoughts this morning. The Chief Executive Officer of Precise Financial Systems Limited.
You're welcome.
All right, it's AFEX time next, but that's after this break. It's still here on Business Morning on Channels Television. Back, some steps back into the last trading week where we saw mixed performance across key indicators. Let's start from the turnover. We saw that it was in the red. It's declined by 13.98% from 2.36 billion naira to 2.03 billion naira week on week. We also saw a decline of 4.36% in the volume of contracts traded. However, there's a flip look to it when we saw an increase in the number of deals traded by 7.19%, closing at 179, and an increase of 0.47% in the AFEX commodity index, closing the week at 478.51 index points. Now let's look at the AFEX exports index. In the same line, we saw a positive trend moving from 221.04 to 224.04 points. The volume of contracts traded, we saw an increase in volume across soybean, paddy, rice, and sorghum, and price across grain commodities. Going to prices now, we see maize had the most positive trend on the chart, gaining 3.74% to close at 248 naira 97 kobo for a kilogram. And across export commodities, we saw ginger. It topped that chart by 8.27% to close at 900 naira. It's a green one there. However, we see the flip side, cashew nuts. It's declined 0.14% and closed at 614 naira 12 kobo, 612 naira 96 kobo. That's a down there for a kilogram. And then we saw cleaned sorghum also unchanged at 260 naira 68 kobo. And then let's look at cocoa now and see what that looks like here. We see also unchanged, no movement, almost 1,850 naira for a kilogram of cocoa. And that's how the market closed on AFEX Commodities Exchange. I believe if you want more information on that, you can go to their website and talk to them on their social media handles as displayed on the screen. It's still AFEX time. We head to our Abuja studio where we have Ajia Abdulkadir. He's the supplier chain manager with AFEX. And he wants to speak to us about Nigeria's value chain, which is characterized by 80% of smallholder farmers, a very interesting group of people. They feed us and they employ a lot of Nigerians. While a few commercial processors are plagued by inadequate input, obsolete technology, inefficient supply chains, a whole lot of things going on in that area. First of all, let's welcome Aja Abdulkadir. Good morning, Aja. Thank you so much for your time this morning.
Hi, Ini. Good morning. Thanks for having me.
Yeah, so this group of people are very interesting because we call them smallholder farmers, and yet they hold large place in the community, in Nigeria, in the food chain, and also in employment. Now, with over 90% of African people depending on agriculture for their livelihood, post-harvest losses continue to impede African economic growth and well-being. What are the post-harvest problems that AFEX has seen in its day-to-day dealings with its smallholder farmers?
Thank you, Annie. Thank you for having me. You will not be wrong to say that over 90% of our population largely depend on agriculture to survive, right? Part of what AFEX have been able to notice, is that one of the major challenges that we have is that a lot of these farmers are still not well trained properly on how to, go about the best agronomy practices. I'll give you an example. So how many farmers are aware that there's a certain level of moisture that is accepted to be, for before you can be able to store your commodity, whether in your houses or even in the warehouses, if at all they have them? How many farmers know that it is wrong for you to treat your commodity just on BF law? Because when you do that, what happens is that the value of that commodity drops drastically. Also, the volume of that commodity drops, and when value and volume drops, it means that the farmer will not be able to, get, good, will not be able to get good, value for his or her money. Another thing we have also, noticed is that there is a deficit in infrastructure. And when we're talking about infrastructure, we're talking about, warehousing system, and we're also talking about good roads. A lot of those farmers, in the rural communities do not have access to, good storage facility, and also do not have storage, have access to good roads as well. Because, it's one thing for you to farm, it's one thing for you to have your product, it's another thing for you to be able to, transport that product from wherever your farms is and also take it to, the farm. So these are, a few challenges that we have been able to identify as AFEX.
So in Nigeria, supply chain issues are fed, into that post-harvest losses. What measures does AFEX see that can be put in place to curtail this issue?
So one of the things that we need to put in place is to ensure that, of course, I've spoken about the infrastructural, deficit. One of the things we need to ensure is to ensure that, we have good road networks, such that when this farmer is able to, when this farmer harvests his commodity, is able to, have good access, to be able to plow, the roads and, take it to the market where he can be able to get value for his money. You would agree with me that the people that are worst hit in this our commodity chain values, people who deal with, perishable goods. A lot of these guys, because of the, bad state of our roads, both in Nigeria and also in some part of African countries as well. Ordinarily, what would have taken you maybe 24 hours to 48 hours to get to the market, most likely will maybe take you 7 days or even 10 days to get to the market. And, some of these commodities, like I said, especially for the perishable commodities, if you are not, able to, quickly move them as quickly as possible to the market, it means that you're going to be losing out on that level. So we need to, improve on our infrastructure. We should ensure that, we have a lot of warehouses in and around and across, Nigeria and Africa as a whole, so that these farmers can be able to, have access to them, and, we don't have loss in revenue in respect to the farmer, and also we don't have, food shortage or wastage at the end of the day as well.
Well, interesting, of course, that issue of infrastructure is a well-known challenge that a whole lot of people and other sectors, not just the farmers, are looking into. And unfortunately, it looks like it's not a Nigerian thing only, it's sub-Saharan Africa. But what is AFEX doing, maybe in collaboration with the government? Are you talking to the government? Infrastructure, we know, is more of a government, on the government list. But what can AFEX do, to kind of, at least buffer some of this impact on post-harvest loss?
Yeah, so thank you, Ini. So part of what we've been able to do in AFEX is that we invest so much, in research. We're trying to look at what other ways or what other things we can explore to ensure that we reduce all of these leakages. And part of what we've been able to do in AFEX is that as of today, we have over 150 warehouses cut across, every nook and cranny of Nigeria. And also, we are also expanding and going out of the shore of Nigeria. We are presently in Kenya, and we are also presently in Uganda, trying to, translate that model that we use in Nigeria here, which is working for us, to ensure that it also works for these guys there. So part of what we do is we ensure that we have a lot of our warehouses very close to the farmlands, so that the farmers will not have any excuses to say that maybe because these warehouses are very far from them, that's why they are unable to bring these commodities to come and store with us. Also, part of what we do is that we ensure that we don't charge so much, so that it doesn't serve as a burden to these farmers as well again, so that there won't be any excuse to say that, oh, maybe because if I have to go and store this commodity, I would have to pay so much for it. So part of what we've been able to do in AFEX is to see how we can collaborate with governments and talk to them to see how we can be able to help through our strategy to be able to ensure that these farmers at the end of the day are being fixed. And part of what we've been trying to talk about also is to encourage the governments. Of course, we like the fact that we are already into the rail system. We just need to perfect that sector. I can bet you that we're able to perfect the rail system very well. It then means that we can be able to move these agricultural products, through the rail system. And I can be able to say that if I move my commodity today to the rail system, in the next 24 hours or maybe 48 hours, it should get to wherever it's going to, vis-a-vis. Unlike today that you can have an LPO to supply maybe in 5 days, but because of the deployable nature of the road, you are unable to move these commodities and get to the final destination in that 5 days. And sometimes, you have your processor drop the price on you because you're unable to meet up. But if we're able to get the rail system right, I'm sure we will reduce the pressure on the road. Of course, we will reduce our cost for the government as well. That would, because when you have too much pressure on the road, it means that the government needs to continue to rehabilitate this road and spend so much money. This money can be used to fix other part of the economy. So that's what we think in FX.
All right, thank you so much, Ajay Abdul Kadir. Obviously, that rail system will be good for not just passengers, but also cargoes, and it could help our food security. Thank you so much for sharing your thoughts with us, Supply Chain Manager with AFEX.
Thank you, Elaine. Thank you for having me.
Business Morning is still on, but we'll take a breather. Welcome back to watching Business Morning here on Channels Television. We head to our London studios now with Juliana joining us. Juliana, good morning and good to see you, Juliana. But the number of homes available for rent is down by 1/3. Who are taking up those homes?
Yeah, that's a $1 million question, actually. Good morning, Innie. But I suppose lots of economists and people that look into the housing sector here in the United Kingdom are blaming it on a series of issues, one being immigration. We have a huge, I don't want to describe it as a problem, but I suppose the British government would describe it as a problem. Immigration issues, lots of private sector housing, or even housing that is being provided by the public sector, is being paid for by the government so that we can house people that are coming into this country illegally. And then, of course, nobody's going to be forgetting anytime soon Trussonomics and Kwasi Kwarteng's budget, which shocked the markets, spooked investors. Interest rates have been hiked. Mortgage payments have been much higher. So typically where you would get lots of investors that purchase properties for letting, they're just not doing it anymore because they don't consider the housing market to be profitable. All of this research has been conducted by Zoopla, which is an online property search market here in the UK. Quite huge. I think they cover about 85% of the UK property market, and they've been involved in the BBC's Rent Health Week. So they've been speaking to lots of renters, lots of beleaguered landlords, and they found the shocking information, which is pretty interesting because, of course, it just weighs into the whole debate about the cost of living crisis and the fact that people are still really struggling, particularly if you don't own a home and you're somebody that has to change properties every now and then, and you're realizing that your rent is being driven up by high demand and the fact that landlords are pricing up the properties just because it's just not as affordable as it once was pre-pandemic, pre-Kwasi Kwarteng budget.
Pre-Kwasi Kwarteng, Juliana. That's a good time. Well, we also have this case about renewable energy investors going to court because of subsidies. Fill us in on this.
Yeah, this is a really interesting story, actually, and it puts into the spotlight the EU and whether or not they can be trusted when it comes to international treaties. So this is a decade-long case, and it's got to do with Spanish subsidies. So the case is now being heard in the London Commercial Court this afternoon, and it's a $125 million case that's being brought against the Spanish government by investors from the Netherlands and Luxembourg. Now, as part of this kind of lean, green, clean initiative, underneath the European Union umbrella, the Spanish government were offering basically subsidies and incentives for anybody that would invest in their country if it was ticking all the clean, green regulations. Investors did it. They ran to Spain to put their money in. And then after the pandemic, Spain slowly started taking back those subsidies and those incentives. So basically, investors were basically lost a lot of money. They're not happy. They're bringing them to court. I said this is a decade-old case. In fact, according to the United Nations, Spain currently has 40 similar cases such as this in international courts. They've lost 20 cases already, but they haven't paid out, which is why a lot of people are watching this case very closely, because when it comes to violating international treaties, Spain is on par at the moment with the likes of Venezuela and Russia. Not great, particularly not great for the EU, because EU law is defending Spain at the moment. So like I said, lots of people are watching this now to see how the London Commercial Court rules, because of course, you can also get green incentives everywhere. So if they're not successful in Spain, lots of people suggesting investors may take their money out of the European and head to Britain or indeed America.
Juliana, thank you so much. That's obviously an interesting story. I know, well, we haven't seen the last of it yet. We'll see what comes out of their demands and what the London courts will pronounce. Thank you so much. We'll have you at 1:30 during Business Incorporated, Juliana.
Thank you, Winnie.
All right. Just before we go to the market, I believe we can have the market now with Will. Will Ebong will give us a look at how the market closed yesterday. It's still in the red. It's still in the red, but I mean, it's not as bad as it was the day before. The day before, it was down more than 2%. That's what we saw there. If we can just have Will come in and give us all of that, Will. You still have the red market, Will, but I know it's not as bad as it was.
It's not as bad. Today is just 1 point. I mean, yesterday was just 1.16%. It's still, I think investors are beginning to calm down. We see a bit of calm in the market, though profit taking is still very much in full swing. You know, investors are trying to take profit, you know, as to benefit from, you know, capital appreciation, maybe from markdowns. And we've seen Zenith Bank and PZ Cussons and Cadbury also release
And you were telling me before about MTN, why we saw such a big fall.
Yes. You know, they've done the markdown, so down 10
So
naira.
just before the markdown, people just want to sell.
They wanted to sell up and get the monies, you know, to make profit from there. So we're seeing a lot of sell-offs in the market market. But today we're going to be talking about, the listing, the completion of the listing of Dangote Industries Funding PLC's 300 billion naira bond issuance on the exchange, on the FMDQ exchange. Now it's completed the unsecured bonds on the exchange, and now we're going to have a discussion with the group managing director, Mr. Olakunle Alake, Group Managing Director, Dangote Industries, to join us on the program to talk about the benefits and the expected outcome of this listing. It's good to have you on the program, sir. Good morning.
Good morning.
Now, we've seen that the debt program represented Dangote's group's first issuance. It's a landmark issuance. It's at the group level. What were the highlights of this listing for investors, especially for investors buying into this bond program and the listing on the exchange? What are the expectations?
I think, first of all, thank you very much for inviting us to this program. If you look at it, this is our first time out as a holding company. We've had issuances using our other subsidiaries, DCP. But more importantly is that with what we've done now, we've allowed people to be part of our Dangote project, the refinery. What that means is that those who have invested in this bond basically are part of the stakeholders, and we've given an opportunity to participate in funding the project. It has always been our plan to have this kind of funding opportunity for Nigerians. We've had funding from banks, and it's our first time out to allow Nigerians to participate in that project.
So we know that part of the reasons or part of the plan for this issuance was that it was going to be used to fund the Dangote refinery. So what should investors look forward to in terms of the startup of the refinery?
Okay, this is a question that not just investors, Nigerians have been asking, and it's been quite difficult for us to give you a particular timeline because of the challenges, of course, you have this kind of huge project. But what I can assure Nigerians is that definitely this year, we will complete the project and we'll have products out there in the market for Nigerians to buy. So I won't tell you it's next month, in 2 months' time, but I can tell you very clearly that it will be a phased out completion, and it will start from maybe second quarter, which is next quarter we're coming into. I'll probably ramp up and end up by the end of the year.
So what other value additions do you think this project has brought on to play in the economy? What should Nigerians or other investors be expecting?
I think beyond what they're expecting, what they've been receiving so far, is that the fact that we are having that project within Lagos area, we've had huge economic activities around that space, the Lekki axis. We've had a lot of people, a lot of suppliers, contractors, a lot of employment, and going forward with this, with the production of petroleum products in Nigeria, we'll have conserved a lot of foreign exchange for Nigeria. More importantly is that we are hoping very strongly that the price of products will come down because the logistic cost that we incur today importing products will be out of the way, and therefore Nigerians will have products at a lower cost, lower price. Availability will be there. There won't be scarcity. To be there just in time for people to buy products. So at the end of the day, this is one project in Nigeria that we feel is very important. Nigerians would definitely benefit from this. And at large, we're talking of improving the economy of Nigeria and probably even the West African space.
Talking about improving the economy, we can't ignore the fact that we are still operating within some of the macroeconomic factors that have been weighing on the country's economy. Now, we've seen the continued hike in inter-monetary policy rates and also inflation. How has this impacted the group's operations to date?
First of all, inflation obviously means that there's higher cost of product. We haven't seen a significant improvement in the purchasing power of people. Companies are struggling to increase salaries because the cost is on the high side. But I think at the end of the day, we will have, Foreign exchange is a major issue in Nigeria. It will continue to be a major issue until we are able to conserve foreign currency, foreign exchange, or we're able to get more export proceeds coming to the system. So for us, what we have done with this project essentially is to try to reduce the amount of foreign exchange that Nigeria needs to import petroleum products, which will impact significantly on the reserve, because at the end of the day, we'll then have more funds to do other things. And with this, we believe that Nigerians should be a lot better in terms of the lifestyle should change slightly, because we now have products that is available at any point in time that people need and at a lower cost.
So you're saying that Nigerians can access your products. You have 11 distinct industries in the country, that maybe sugar, cement. You think we're going to be seeing lower prices of cement anytime soon? Lower prices of other, building materials?
No. I'm not one of. I will tell you very clearly, and you also know that costs are going up. That means that prices will also go up. The question is whether we won't have the availability of this product. There are challenges today in getting products into Nigeria. If you're importing materials today, it takes you almost 180 days to get a product, an order that you set in motion. So it's difficult, and I will tell you, it's difficult doing business, but we're trying our best. We will try and minimize the impact of the rising inflation. We try and manage the pricing. There's a limit at which we can increase price, so we manage that. We try and reduce our costs. We improve efficiency in our business and ensure that people get price at what we call affordable price, affordable cost, good quality, and is also available.
Thank you so much, Mr. Olakunle Alake, Group Managing Director, Dangote Industries Limited, for sharing your thoughts and bringing the 300 billion naira bond program to Nigerians and to investors at large. Thank you so much.
Thank you.
So that's it, Ini. We're looking at Dangote.
The market had a different face
today. And Dangote Refinery is, we said it,
yeah,
it's coming on board soon. And probably we'll see lower prices in terms of, fuel, but we don't know. We'll keep fingers crossed if inflation doesn't keep going up.
Well, one interesting thing that Mr. Lake said is an opportunity for Nigerians to be a part of Dangote and the refinery,
yes,
which is a big need. I mean, we're talking of subsidy or no subsidy. Will this solve the problem, at the end of subsidy and all of that? These are big questions.
We'll wait and see then.
We'll wait and see. Thank you so much, Will. All right, so now let's head to the crypto space now and see what's going on there. We do know that the sentiment there is still greed, but not as greedy as yesterday, or not as greedy as Monday. We're now at 57. We're getting back to either neutral or fair. I hope something moves the market real soon, so we'll do that. Let's look at the prices now. We do see that the market cap is still recovered a bit from what we had yesterday, but is still doing the $1 trillion. The 24-hour volume down at $41.37 billion. And the dominance of BTC still ranging within the 40%. Today is looking at 45.83. Let's look at other numbers now. The price of Bitcoin gained a bit, 27, struggling to get to 28 again, which it lost some time ago. 24-hour volume of Bitcoin is 18.01 billion. Now let's look at the price of Ethereum. Looking good at more than 3% in 24 hours, 1,791.14. And 24-hour volume at about 8 or almost $9 billion. Top alts by market cap are all looking green this morning. Laddie Williams would have been happy to do this morning. XRP is looking really good at more than 11.5%. But let's have a conversation now with Rume Ofi. And we saw this morning that CFTC has filed a complaint against Binance and the chief executive officer, as well as other executives. And they are saying that it's bringing the action to stop defendants' illegal conduct and behavior and to force them to comply with the law. One would have thought that Binance was really strict and you would not have this kind of complaint. But, I mean, let's have Rume Ofi tell us more about this. Hi, Rume. Good morning. What's the back story? What's the front story?
Good morning, Ini. It's a pleasure. Regulation has been a very serious challenge globally. And before now, you must have heard of the US SEC says that aside Bitcoin, every other thing is a security. But the CFTC have actually come today to say that Binance is avoiding certain US laws, which in again suggests that the CFTC sees cryptocurrencies like Bitcoin and Ethereum as a commodities. If you notice today, XRP actually has pumped because it is also being perceived that they might be also be seen as a commodity. But some of the things that have been accused by, that Binance have been accused of is that the agency said that it's executive violating US law by failure to supervise the exchange operation. Then the watchdog also said that Binance management helps customers to circumvent the platform, that is making customers to use VPN to mask one's location. That is, if you're in the US, it takes you away because the US, if you're in the US, certain features you're supposed to have. But Binance is saying that they've been able to collaborate with this platform for 2 years, that all of these accusations are not making sense to them. They are also defending it, but I'm looking at a situation where if this doesn't go well, it's going to be a very serious situation with Binance US, which might be greatly affected.
Yeah, and we know that before now, logging on to your crypto, especially Binance in the US, has been a problem. I wonder what this will mean for Binance in the US in the future.
Yeah, Binance in the US might just lose a lot of traction, because the Binance arm of US services all of the people there. Binance is in a whole lot of jurisdiction and they're doing quite well. But this is going to change the perception about that, because a few days ago, they came up with another allegation saying that there's some things to do with fraud. So peradventure, maybe some funds, illicit funds must have passed through. It's now led for Binance, CZ, and the whole of the executive to bring their evidence to court.
All right, Rume Ofi, thank you so much for your thoughts this morning, and enjoy the rest of your day.
Thank you. Thank you, Ini.
All right, so that's where we draw the curtain on Business Morning today. Thank you so much for being a part of it. Please remember to join Will Ibong at 1:30. She'll bring you update from the world of business, and I'll see you at 10 p.m. during the stock market report. But before then, go out there, make some money. I'll see you tomorrow.